If you break out the 4-year cycle into 4 seasons, winter, spring, summer, and fall, you tend to get about a 15-month period for crypto winter and crypto summer, and then 9-month periods for crypto spring and crypto fall. We had crypto winter. We peaked in November of last year around 67,500. The fair value at that time of the Bitcoin blockchain was probably somewhere in the high 20s, right around 30,000. And we were too high. There was too much leverage in the system. That all got reversed when they approved the Bitcoin futures ETF instead of the spot ETF. And by approving the futures ETF, you basically allow big institutions, particularly banks, to go short the Bitcoin market without actually having to have exposure to the underlying Bitcoin. And that put downward pressure on prices. That led to liquidations of leveraged speculators and gamblers, led to the crash and the bear market. I think we're in crypto spring, and spring doesn't mean straight up, right? That's summertime, parabolic move, more speculators. Spring is kind of yuck, right? It's kind of windy, it's kind of rainy, it's kind of muddy, and we kind of just bounce along and consolidate. And I think that's where we are. I think we're in this 9-month period from kind of June to first quarter of next year, where we consolidate, we gather momentum for the next crypto summer, which we'll anticipate the halving in early 2024. And so now we're at this really interesting place where the fair value and the actual value are very tight, and people are waiting for this big macro pivot. Probably not coming, right? The Fed's probably not going to double the money supply again. So we're probably not going to have a devaluation induced price ride. And what people miss, I think, is there's $37 odd trillion with a T, trillion, that's going to go from my generation, the boomers, to your generation, the echo boomers. That's a lot of money. That money's not going to stay at Merrill Lynch and UBS and invest in municipal bonds and IBM. I believe it's going to migrate into the digital asset ecosystem. The 4-year cycle is alive and well. And, the next halving occurs, January, February of 2024. And usually the market will anticipate that by about 9 months. So we're talking about, April, May of next year. And then, and remember, it feeds upon itself. So the first investors come in because they look at the value and then they look at the price and say, well, the price is below the fair value. So if the value of the network is around 20,000 and the price is 19,000, I'm going to buy that. Then as the price moves up into the low 20s and the value starts to creep up, now the traders just get involved because they're like, oh, it's moving. It's going up. Well, then what happens is people look at the halving and say, well, if the block rewards get cut in half to 3.25 from 6.25 to 3.125 from 6.25, then the price has got to double-ish in order for the miners to continue to make money. If we take gold, the gold value in the world is 10 trillion. But half of that doesn't count, right? It's chalices and jewelry and stuff that you can't really use. The other half is the monetary value, the bricks and bars that sit in people's, accounts and, Fort Knox and, Swiss bank vaults and all that stuff. That's 5 trillion. 5 trillion, okay? If you think about 21 million Bitcoin, is probably less than that. You do that math and you get a 250K number. Okay, that works for me. So gold equivalence is about 250K. When would that happen? Look, if the next halving we add another zero, so we go from 10,000 to 100,000, and then we get that speculative bubble in 2024, 2025 that pushes us into speculation. Could we get to 250? 200 is probably more likely, but 250 is possible.